I tell you, it's not a great earnings season. If you look at some of the stats, you might think, actually, it's okay. It's roughly 50% a little better beat, about 35% miss. But actually, as a matter of fact, that is the worst earnings performance we've seen since the pandemic lows. Usually, more companies play the game and are able to beat expectation.
And is that reflective in the markets at all? I mean, Tim, for our global audience, we should point out over in the United States, we are seeing a 10% correction in the S&P 500. How is Europe faring off this earnings story?
Yeah, this is interesting, too, because you would think with the sell-off we've seen, and certainly European stocks have been under pressure as well, that maybe this is already baked in. Well, in fact, it's not. You do have a skew to the negative on earnings results, especially if there's any whiff of disappointment. The financials, I think, are a highlight. This group has been quite strong, quite profitable on the heels of rising interest rates. And for those banks that have shown a crack, if you will, in that story, they're off significantly. I'd say the one offset to this is energy. It doesn't matter whether the energy companies have beat or missed on earnings. It's all about rising oil prices right now, and those stocks have been reacting positively.
I mean, Tim, margins have been important always when you're looking at the earnings season specifically. But right now, and the idea that when you're seeing inflation actually come down, and in a lot of the major parts of the world, we of course got that German data, for example, earlier in the show, are a lot of these companies then able to make it up in the profitability story? That feels like an easy win. Is it?
Well, just a couple of things here to consider. Margins are a key touchstone in this reporting period. We're at almost record levels in terms of European profitability across the market. And yes, we are seeing some costs recede, but at the same time, we've got economic slowing, and so that calls into question the top line. And indeed, the top line has missed a little bit. Companies aren't standing on they're resting on their laurels, though. With this, we have seen reorganizations announced, optimization of portfolios with some of the consumer companies, and a significant amount of headcount cuts, much more so than earlier in the year. So companies are taking some action.